And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And good morning, everyone. Welcome to the Market Forecast for Tuesday, November the 29th. My name is John Hoagland. Thanks, as always, for trusting me with your time. Our focus is always on accurate context, good risk management, and remaining patient in our trading. If you're already in the markets, hopefully things are going your way. Not a lot of activity or directional things going on here just yet. But the day is early. We do have a couple of economic numbers to think about this morning, although I don't see any talking Feds on the schedule this morning. 8 o'clock a.m. Central Time, the Case-Shiller and the FHFA housing price indices are due out. And at 9 o'clock Central, the consumer confidence number comes out right in the middle of Make Hoag Money. Hopefully you'll join me for that today. As far as other news is concerned, equities are set to open sharply steady after a pretty deep move to the downside yesterday, largely remaining, however, in balance. A lot of folks talking about the fact that some of the COVID things seem to be easing around the world, less apocalyptic warnings about COVID. Also, hints of easing inflation in the Eurozone have added a little bit of perhaps lift to the equities. They seem to be struggling to hold on to those early gains this morning. ECB President Lagarde, however, doubts that inflation has peaked yet, so a little conflicting information there. Crude also has firmed as Chinese demand is expected to increase with lower COVID restrictions. As always, looking here at the VIX, the dollar index, and the yield on the 10-year. The VIX is a little bit lower this morning, 22.11. The dollar index also off a little bit at 106.47, and the yield on the 10-year slightly higher at 3.71%. So today is a busy day here at Top Step. We've got the forecast, we've got Make Hoag Money, we've got Coach's Playbook. We are going to be trying to remember what the subject is. It'll come to me eventually here. Then we've got then nothing really till the recap. So busy morning, and then we will check out what happens at the end of the day. We will reflect on the trading day at the end of the day. And as always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notified when we do go live on YouTube. And as always, the Make Hoag Money is available on the Zoom meeting and on YouTube. Good coaching session yesterday. Thank you for all of you that joined that. I thought it was a pretty good session, really good questions, and hopefully they were answered well and helpfully to you. As always, if you do have suggestions on improvement of Market Forecast Recap, improvement of Make Hoag Money or group coaching, make sure you email me directly. That's jhoagland, JHOAGLAND at topstep.com. If you like what you're seeing, tell everybody. If you're missing something, tell me. Good morning to everybody. We've got Shaw Cunningham first in the room and winning the prize this morning. Hagel Matters. Good morning. Theo Timothy, Orion, good to see you. JM, Jay, Caprice, Terry King, Serenity Trader, the Rooster Jules. Marcelo, good morning. Dan, good morning. Joel MB. Bill Phillips, Alessandro, good morning. Thanks for joining us yesterday and your good question in group coaching yesterday. We do that again tomorrow at 12:30 again. Naztic, good morning. Danny Ireland, Dark Heaven, let's go. Jason, Jimmy Decker, good morning. John Huckel, Olaf, Serenity Trader, tomorrow's the big day. Bomber pilot J. Powell flies into the fray. Yes, he is scheduled to speak tomorrow. We have the second estimate for GDP tomorrow. And Jerome is due to join into the fray, as you say, at 12:30 Central tomorrow. So should be another interesting day for us tomorrow. Scott saw and he conquered. JD, good morning. Yes, head and shoulders forming. Well, we'll take a look at that, JD. Vince, good morning, my man. Tyler, Caesar, Alejandro, Dimitar, Jason Lewis, Day Trader, and Keith Ablaw. Good to see everybody up and at 'em early this morning. Good morning, Sarah Hall. Prayers and love to you as well. All right. So we are going to get into the charts pretty quickly here because we like to be done with forecast within enough time to get prepared for Make Hogue Money today. Again, if you're not familiar with Make Hogue Money, you can watch it right here on YouTube, or you can join us in the Zoom meeting. But it's an opportunity for you, the traders, to offer opportunities to me to trade in a real account to try and make me money. Simple as that. So we're going to have a little bit of fun with that this morning, hopefully, and have a nice little profit. We had two trades that really just didn't do much yesterday. At the end of the day, there wasn't a lot really offered by the marketplace. We had a couple of opportunities that we ended up kind of scratching, and not a lot going on there today. Equities looking like a little bit of repair early in the session today until some of these economic numbers come out, and we'll see what happens then. So let's jump in. Good morning, JD Royalty. Let's jump into the charts now and start with the daily and the S&Ps. We had gold roll over into the February contract. We also had the treasuries move into the March contract overnight last night. So we got a couple of changes to some weekly kickoff levels we'll review as we get through the charts. But as we mentioned, starting with the E-mini S&Ps, a pretty decent down day yesterday, but the volume wasn't all that impressive. Really kind of low volume. We did add 18,000 estimated new contracts, which would indicate some new sellers coming into the marketplace. Some new short bets. Increasing open interest on a down day says, yeah, we've got some sellers in this market, but where did they take it to? We're right back into the area of lack of confidence, this balance area here that we kind of broke out of the end of last week, and unfortunately we had the holiday, which really just kind of capped off the high here. Yesterday we get a little bit nervous, we get some selling, it takes us near the low end of the area of balance and near the weekly kickoff low, which is 39.54. Don't quite get there. Market attempting just to kind of hold where it is. And when we take a look at the 30-minute chart, we're inside value, inside the volume value. We may be a little bit below TPO value. We're going to see this in the TPO charts, but the market spent a lot of time in an area that is boding for repair last night. So we're getting a little bit of a downward turn here. And, overall, as far as the short time frame structure, it is to the downside. We're putting in lower highs. We're putting in lower lows. Until something changes, we may be looking for opportunities to sell strength. So right back to settlement. No overnight inventory as we come into the open here. Because we'll be watching the open and Make Hogue Money. We'll see if we can find some opportunity. When we open in an area of repairs such as this, okay, the tendency is for the market to trade to high volume nodes on both sides. Our point of control right here. Okay, that's the high volume node for the bottom is 39.71. Our high volume node up here is all the way up at 39.94. We need to open between those two levels for the market to really kind of fall into repair. Now, if we take a look at this on the TPO chart, okay, here's yesterday's profile. We have an area of time and balance and value here. We also have a time of balance and value here. We can see the volume value area goes all the way to the bottom of the range yesterday up to here, which is the TPO point of control, and the value area for the TPO profile, the low is here and the high is here. So it is currently looking like we are rejecting TPO value. Going to go check out this poor low that we have yesterday. Okay, this M period 1 TPO sticking out the low below this L period is a weak low. It's a poor low. It's an indication that the downside auction is quite possibly not finished. So we have an unfinished downside auction opening below an area of repair, and these single TPOs represent excess above price. So this area right here can start to now become resistance. Well, value high from the overnight is right at the close of those TPOs. So a couple of interesting levels here. Okay, on the close of the TPOs from yesterday, if we open below the high volume node here, if we open inside between the high volume nodes, and that's this high volume node and this high volume node, which is the point of control, that changes things a little bit. So a lot of this depends on where this market opens. It could be pretty much of a nothing burger until some of these economic numbers come out. But we do have an unfinished downside auction to the downside in yesterday's profile. What are we looking for as far as continuation is concerned? Well, we've got 39.54, which is the naked TPO point of control from back here on the 21st. It's weekly kickoff low. Then we've got a little bit of space down below that. So I'm looking for really an opportunity to see price test this level down here for some bigger opportunities with the ability to limit risk. Here's crude oil. We do have the API today. That's going to be at 3:30, and then EIA tomorrow. So the market has really been rejecting $75 or $74 rather stiffly in several occasions. Back here in September, back here the 21st of November, we tested down below it yesterday and rejected. A lot of this rejection has been created by fundamentals. Some of the producers saying, no, we're not going to increase production. So you got to get a really good idea of the line in the sand that the producers don't want to sell crude oil less than around $75 or $74. Important information. Yesterday, when we looked below here, we got a little too short, it looks like, because we lost 6,000 in open interest. So we've got a fundamental rejection of $74 to $75. Over an open interest loss yesterday, short covering. We got too short in the hole. Here's the 30. Okay, here's our move down below weekly kickoff low. It happened in the overnight. As soon as this market opened and took out the high of this area of balance, we're accepting above it. We go with it. Back above weekly kickoff high. Continuation to the upside. Continuation last night. Overnight longs. Opening with a gap to the upside. We've got another gap that we have yet to fill between Friday and Thursday and Friday. Naked point of control from Thursday isn't going to be that prominent, but it is out there and visual. We've got weekly kickoff high of 81.50. So again, gap rules. If we cannot close the gap relatively early, we're going to be looking for opportunities to buy weakness to see this market continue this move to the upside. We do have, of course, API and EIA tomorrow and other things that can affect those markets. As we always say here on the Market Forecast, ACH, anything can happen. Good morning, Three Lions Insight, Glitter Sandwich, and my brother Rick is here. Good morning to you, sir. Good to see you. And NASDAQ, here, let's start with the daily. So the NASDAQ is much more range-bound than the S&Ps. We had a kind of a breakout of the S&Ps above a symmetric triangle. We had a falling triangle that we broke out of last week. Now we're just kind of falling into range-bound activity. Our weekly kickoff low is probably losing some of its luster. It didn't create the change in inventory in longer time frame that we thought it might. That does tend to happen from time to time. We only lost about 400 in open interest yesterday, and volume was relatively low. So volume and open interest in the NASDAQ relatively inert. We are inside an extended trading hour range. Are we in balance? Is the weekly kickoff level going to create opportunity for us? Well, it was at one point a little bit of resistance last night, was a little bit of support last night, now is presenting perhaps a little bit of resistance. We're probably not going to be opening with a gap, but we may be opening below the volume value low here, which is different than the S&Ps. The point of control was a lot higher yesterday. The NASDAQ actually presented as the stronger of the two of those markets yesterday. So we're going to be opening in range, no real overnight inventory, suggesting we try and stay patient. Okay, so Joe's putting in his hypo here. Look for two-sided balance day because opening within value and balance overnight is short. So look for response if long at the open with a target on the overnight volume point of control 39.82. Look for exhaustion to short that. Joe, thank you for your hypothesis there. Hopefully you're going to join us for Make Hogue Money. We'll see how these things work out. So, again, try and stay patient. Overnight inventory in the NASDAQ is moot. Nothing there. Gold. We are in February gold. There is approximately a $15 premium from the December contract to the February contract. I've adjusted my levels, and we are ready to start trading February for a couple of months anyway. Lost 3,900 in open interest yesterday. It's rollover. That's probably more rollover related than anything directional. The market is in a rollover range. It does happen. Had a little hiccup there, I think, with my internet. Hopefully everything's okay. So it's switch day, rollover range day. We've been saying that this market is in short time frame control, and it certainly seems to be remaining in short time frame control. We're really kind of tightly packed in this area of balance. We can kind of see that the last week's high, yesterday's high, is one of the extremes of balance. Our overnight low looks like one of the other extreme of balance. And in between, I'm going to try and stay really, really patient as it is rollover, as we are short time frame controlled. So we've got, thought I had a couple of levels written down here. Overnight inventory is a little bit long, although with this consolidation here, that can do a lot to even out inventories. We are near the upper extreme. If we're going to be looking at last week's high as one of the upper extremes of this short time frame area of balance, it certainly gives us the opportunity to limit risk. Our overnight low relatively close. I'm looking more like about 1748 as the lower extreme of balance. And in the middle, I'm going to try and stay really patient. I see Serenity Trader saying, Lord, I want patience. And I want it now. All right there, Veruca. here's the euro. It's going to look a lot like the 10-year and gold, actually. We had a look above weekly kickoff high that was swiftly rejected yesterday as the dollar started to uptick a little bit throughout the day. Nice trend day to the downside. This was a real good one. If we rejected above weekly kickoff high, we go short below it, and that was a really decent opportunity for us. As far as overnight inventory is concerned, I don't really see much. Looks like we've opened here with no gap. We've looked lower, seeming to reject trading lower. We do have a little bit of a gap down here with which to fill if we can. We have a visual in a couple of naked points of control down below. But this is really centrally located between weekly kickoff high and low, not prime trade location for day traders or swing traders. Perhaps a shorter time frame trader could have some success today in the euro. We wanted to look and see if we saw a head and shoulders in the S&Ps today. I think we were looking at that 30 right here, so we've got price moving up to a shoulder, a head, a shoulder, and maybe some continuation to the downside. If that is the case, then I think we have certainly kind of broken our neckline. And the estimated direction or termination of the measured move, I think, would take us down to value low from yesterday. Take a look at the 10-year. So, 10-year also, we are now in the March contract. There is about a 1.5 second premium from Dece to March. Weekly kickoff high is now 114.20 on the upside and 111.13 to the downside. We're still in last week's range. Adding 27,000 in open interest yesterday, and that could easily just be a function of rollover. Range bound, short time frame controlled. Overnight inventory was a little bit long, now maybe a little bit short. Looking at where we are as far as the range area, we're back in the center of it, so I'm going to try and avoid getting into that because we know we're thinking we are in short time frame control. Short time frame levels are likely to hold. It's just a matter of which ones. There's a lot of them. If you're going to be trading the 10-year today, be careful. It is, again, in rollover. And for the 10-year, or for the natural gas, and a couple of natural gas fans. So we got an inside extended trading hour range. It's seeking and finding balance for now. We have the schedule for the natural gas released by the EIA back to Thursday with the lack of a holiday. So really the market inside last week's range is centrally located. It's like our little tennis player that's looking to be centered, because if the ball comes this way, they want to get there. If the ball comes this way, they want to get there. Stay patient if you are going to be trading the natural gas. We lost a 700 in open interest yesterday, relatively small, low volume, nothing tremendous happening yesterday, and an inside day so far today. So here's our inside day. Do we have any overnight inventory? No, not really. Who's going to come in and jump on this thing? Who is going to take over? We traded back to settlement. The opening is up here. We've been there a million times. No real overnight inventory. Stay patient in this market today. Just sip your coffee, right, JD? Joel. Cooking tip: if you stir coconut oil into your kale, it makes it easier to scrape it into the trash. I like that a lot. I used to go fishing in Lake Erie a lot with clients, and so you catch a lot of walleye, and you'd catch a few fish called sheep's head. And I asked the guy on the boat one time, I said, is sheep's head good to eat? And he says, well, some people like it. The way to cook it is you take a cedar plank and you put some seasonings on the fish and some olive oil, and you roast it on the cedar plank. And when the fish is done, you throw the fish away and you eat the cedar plank. So apparently the fish was not that good to eat, much like your kale, Joel MB. So, all right, let's take our deep breath and be ready for Make Hogue Money today. We're going to stay humble. We're going to stay grateful. We're going to stay creative, and we're going to stay patient in our trading today. It is our hope that you are successful in your trading today, and of course, that's my hope as well. We'll see you for Make Hogue Money, Coach's Playbook, and the recap at the end of the day today. Looking forward to seeing everyone, and let's get out there and profit today. If I don't see you for Make Hogue Money, have a great trading day. Join us later on for, again, the Coach's Playbook or the recap at the end of the day. Always look forward to seeing you. Get out there and profit today. Trade well. I will be in the trading pit here in just a hot second. We'll be ready. Trade well today.